There are more turbulent times ahead, and these times are specific to when we should be the most protective. I have some targets for everyone to observe and to keep under consideration as we reach these inflection points. Keep sharp on the broader markets and catalysts coming in because anything can trigger a further downside. Welcome back to the channel on this sunny Sunday. This is ARCa, and let's pop into GameStop. Let's kill them, team. What is up, you guys, and welcome back to the channel. Please do me a favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Let's go ahead and take a look at GME here on the buy daily chart, and I do have some things to talk to you about, right? First of all, guys, we have, you know what, we're talking about Israel, we're talking about Iran, we're talking about, Trump getting shot in the fucking head, man. We are talking about Biden stepping down. Guys, the markets are pricing in a very turbulent time. Gotta watch out. We gotta watch our backs or else we're gonna get left behind, right? So let's go ahead and go over some potential targets here because we need to make sure to stay on top of the trend. Okay, so actually, let me actually look at the daily chart with you instead of the buy daily chart, right? I want to point out to you this target that I've been pointing out here for weeks and weeks. Of course, we didn't know when we were gonna reach it, right? But now that we are on that clear path, it always is important for us to evaluate it, right? So yes, $20.13 marks off a very important key area of support. Why? Because if we go ahead and just mark it off like this, let me just show you with an arrow, right about here, that's your $20.13 low, and this was the $20.13 high right before price action made some incredible moves towards the upside, right? So yeah, this was, it's specific to a 12-hour time frame, right? The daily time frame has that inflection point as a resistance, sure, but it also has it as a support area right about there as well, right? Huge bounce to the upside from that 2013 all the way to $80, as we already knew, right up there. And of course, right down here, we touched down at that demand zone again, and price action started ripping towards that eventual $67 target, right? So yes, it looks like we're approaching that target yet again. We got very close on the Friday session here. We can see on the OHLC values on top, the open, high, low, close is showing that a low of 2043 hit. Not quite the target. Not sure that I'm completely convinced over this, but it does show, price action does show a potential continuation. Another thing is here, when we're observing these ladder downs, right? You can see price action laddering down. This has a higher validity or a higher chance of retracement the higher the number goes, but specific to around six iterations to maybe around 9 iterations, or I would say maybe 10, but around 6 or 9. Okay, so this is going to be your 1, 2, third bounce, third bounce, 4, 5, and this is already 6, right? So if we're looking at 6, maybe 7, the distance between this area here and this zone here, sure, it looks like it could be done, right? It looks like we're definitely converging in price. Looks kind of like a falling wedge as well, right? Lots of different formations can be present here. But if it does have any further downside to consider, of course, we have one more area to observe, and we're just gonna go ahead and point it out here on the buy daily time frame. This area of 1963, right? Of course, it is the bottom. First of all, yes, it is the bottom of your daily gap, right? So let's go ahead and take a look at the daily gap. So right above here, you have an inflection zone, right? That's going to be that space right between these two gaps here. We're already testing the resistance of the actual gap between these two candles and this candle here, right? That space between the wicks. But now, since we've already gotten this low, we're now observing the potential 2013 to this area here at 1968 for this candle here, right? But if we look at the buy daily time frame and we observe 1957, take a look to the left and see how that kind of looks, right? Let me just move these two bars out of the way. Take a look at that huge area here where price action bounced from, right? This was a bounce from 1954 to around $48, and this was absolutely confluent to that jump, except that it went to $50. So absolute support zone here. So what does that tell us? That means that we have a zone to look out for, right? So that's going to be your 1963 to 2013, and that could be our primary area of demand. I am speaking of just the charting here, right, team? I understand that we're looking at the potential catalysts and everything else that's currently being priced in the market, right? Because there's a lot of uncertainty. There's a lot of fear, right? So there's a lot of FUD. So with that in mind, let's just make sure to be sharp. And this is why I'm telling you that as we reach these critical inflection zones, we have to be the most protective, right, guys? And the reason why I tell you this is because I've also lost some money in these times like this in the past, okay, you guys? So I want you to be protective over what you are trading, right? So let's move on to the next topic here. Very important. The stochastic momentum indicator. This is a momentum indicator. It simply displays to you the direction bias of an asset, right? So it's still kind of on that downward trend. In fact, it's a little weird of a crossover, this yellow line, EMA3, crossing over the SMA14 of stochastics. This is crossing above it already, indicating that there may be a floor soon. And now if we're starting to look that this crossover is starting to happen here, then I'm wondering if there actually could be some type of support found soon. That does rhyme very well, but it doesn't mean it has to be. Right, so now that I started testing on the stochastic momentum indicator, which zone was the zone that we've retraced from the most over its entire trading history, right? So this was a huge approximation. This, you know what, I'm going to color it different, right? Let's go ahead and just color it this, whatever that hot pink color is, right? Now, as you look back in history, there have been so many times where we have retraced exactly from this point. The green iterations here are what I marked off as a local area, right? As zones that we used to bounce, right? Of course, I just moved those two out of the way. These were right about here, I believe, right? So let's go ahead and take a look at some of those bounces, right? I want to, well, first of all, yeah, we already noticed that we got those two bounces to the $50 zone. Pretty nice. But most importantly, guys, this is one. Of course, it's incredibly important. Why? Because this was the very floor that we got right when we were talking about price action on GME likely going to $20, right? This was right around the time where we spoke to you about the potentials of the upside, right? So yes, very interesting that is absolutely the zone where we're approaching now, and it could be for a potential upside. Okay, now if we look back, right here, there was another low right at this line that we're talking about, the 7 spot 90% of stochastic momentum lows. This would be a jump from the areas of about 1847 all the way up to 2782, almost a 10-point jump there. Another iteration down here, price action went from 1596 all the way to 2689, right? Another 10-point jump. Here is another one right down here. Price action went from 1657 all the way to 2502, another potential or close to 10-point jump. Right here, another one. This is 2064, jumped all the way to the top end here to 4794. Another one. Look at this right here. Price action went from $19 all the way to $49. Need I say more? Right? Huge upsides have happened from this area here. And the most important one that I noticed was actually right here. So this was the time that stochastic momentum reached that historic low, right where that pink line is. And look what happened to price, right? Went all the way to that $500 target that GME hit. I'm not telling you that this is going to happen here. I'm just telling you that we are reaching a historic moment on momentum. Now, to further the information here for a potential bullish bias in a few days, right? This could happen in maybe 3-4 days, right? We're talking about a bi-daily chart right here, right? 2 days to close even one candle. We just closed this red one here, right? So that could tell us that we may be approaching a low soon, or we may be having a retracement soon. I don't know, guys, but we just have to be aware of everything happening. All right, so let's look at this now. I got some other good interesting news to go over, right? So this is the RSI indicator, right? This is also a type of momentum indicator. And now what I'm pointing at here is actually this pivot here. It's not lined up with this candle for a reason, right? It's lined up with the next candle, the one that we're going to start on Monday. The reason why I'm saying that is because of this. If there is continuation to the downside to consider, it's very likely that this bi-daily candle comes up in V-shape recovers from that bottom side of 2013 to 1968 that we've been talking about, guys, or 1957, right? So if that bounce happens from that area there, that is telling us that the RSI may actually reverse at that point too. Let's go ahead and adjust it here, right here. That would be roughly where the RSI could go, right? It could go right down here and reverse. Why? Well, this is the gravitational zone. Usually a zone where price action finds support and bounces, right? Very cool stuff. Now, look at this. I'm going to point out to you something called a divergent drive, okay? The opposition of price points or pivot points on price versus stochastic or versus the RSI momentum indicator. Relative strength index, okay? It's very standard. Okay, take a look at this low, this spike here. If we get to that inflection point that everybody's been talking about, that means that we could V-shape recover from this point, which would make a higher low in price action, but that won't make a higher low on the indicator. The indicator would make a lower low. And that, ladies and gentlemen, is called a hidden bullish divergent drive. Okay? So if we have a drive of hidden bullish divergence coming up, that could indicate a potential recovery in price. And it would line up with the stochastic momentum finding that historic low, the one that we use for that $500 run, right? Interesting things. This is why I'm here. I want to make sure to display to you the things that not everyone is looking for, right? I got you. No problem. You know what? I could even argue that I'll find some things with moving averages too, right? In fact, check this out. Very much so. My goodness. Take a look at the SMA 50. And yeah, you know what? Yeah, this is your SMA 50 landing right at the $20.13 level on a buy daily, right? Very interesting. And it's not only that. We just got the golden cross on a buy daily time frame. What typically happens? Sure, we get a golden cross, we come back and we validate it. I gotta say that it's also valid because of the pivot of the moving averages. Check them out. This is your SMA 200. This is your SMA 50. So if you have your 200 period with an upside with an upside posturing, and you have your 50 period with an upside posturing, that usually gives it a higher validity. It gives it higher probabilities for a bounce towards that upside. So it's interesting that we're catching here the combination of the golden cross and also the SMA 50 and the SMA 200 or the inflection points, right? The gap on the daily. Very interesting times here, guys. I love what I'm seeing. I definitely love what I'm seeing here. There actually could be some type of bounce. And I want you guys to be protective, right? I want you guys to always make sure to protect yourselves first. Okay, you guys, that's key here. Make sure to risk only what you are willing to lose. Okay, you guys, because or else you'll be losing a lot more. All right, team. The reason why I know all these things is because I am a stock trading instructor. Okay, I want you to make sure to get in touch with me because I'm going to get the beginner's course, the beginner's crash course started all over again, right? In about 3 weeks, we're going to go ahead and get that going. We just finished the first 45 students for the track number 5. Guys, you will be track number 6, which is going to be more than 300 ARCa Bulls students that we have developed, right? So make sure to get in touch with me at ArcMastersCourse, ArcMastersCourse@gmail.com. No more excuses. Make sure to make a change in your trading career, okay, you guys? And most importantly, guys, you know what? I will tell you this. If you want to just forward test me, right? Come by. Join me in the trading team. I want to see you there. I want to see you present. What you're observing here is absolutely that, right? These are the links right here on the top, on the left, right? Join me. Come by to the ARCa Bulls Discord, and we are trading the financial markets daily together, right? No front loading, nothing, no signals or anything. We are trading it together. When your boy risks on, you're going to be able to see that live, okay, you guys? So with that said, I very much appreciate everybody for watching these videos. Make a change. Get in touch with me. Let's make sure to get you in class and get you that syllabus and disclaimer and everything pertinent to the lectures, and we'll get you going. All right, you guys? But with that said, I think this is a pretty good place to leave off the video, and I will speak to you very soon, right? There we go. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, ever, ever, never, never, never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good rest of your night and or day, and I will catch you at the bell on Monday. Adios.